this is part of being scared by learning new things and then telling people about it when I know very little about it. But I do want to stress that basically we wouldn't be here if it wasn't for energy, but we sort of mediate that through money. And somebody earlier mentioned about the importance of power, and we all know from all the banking problems that a huge big chunk of the problem now is the power being concentrated in the hands of the banks. So I say let's grab it locally. So can somebody
It's a right hand arrow.
Right, okay. So I'm going to talk about the idea of a bank for Cornwall, which will be to increase our economic resilience locally. Right, so hopefully all of you know that money is created by private banks. Its only reality is money being lent by banks for people to do stuff. And then, of course, we have to have economic growth because that money is lent at interest, and that's the whole problem that we're facing. Fractional reserve banking means they lend out many, many, many times than they have in the bank for deposits. And those two, interest and fractional reserve banking, cause the whole problem with economic growth. So I couldn't find exactly, but I remember vaguely somewhere that presently UK banks have been using 3% as their reserve figure. So they lend out over and over again 97%, or 97%, they only keep 3% of what they've got, so they lend it out again and again and again. But then the new rules have come in, it's meant to be, according to the Basel III agreement, over 7% is meant to be kept as reserves. But their risk-taking behaviour reduction rules don't come in until 2019. So that's really speedy action, so I think we ought to do better than that.
And just to be clear on that, because this is a bit of a mind melter, essentially they lend out 97%. And then the people who they lent it to might lend it out to somebody else.
Yeah,
and they might lend it to somebody else. And eventually, if somebody says we want it all back, the bank can't do it.
The idea of the 3% or the 7% or whatever is if there's a run on the bank, they've got money to cover it. So they assume that people won't want it all back at the same time. So for every £100 in the bank of assets, they lend out 97. And then the people use that, obviously put that into their banks and then the other banks do it. So they just create more and more and more money. But it's not real, although we act as if it's real. But publicly owned banks will have very different ethos, and there are a few around. They are owned by local authorities, states, councils, and they lend generally according to a local vision. So as part of the setting up of the bank, there's a discussion amongst hopefully the community and the state or local authority as to what the purpose of that bank is. And obviously it focuses on its local area. And then the profits go back to local government. So when you think about local councils now and how cash-strapped they are and where they have to choose between nappies, frill books and libraries, it's the old folks' clean bottoms that win as opposed to education and so on from libraries. So this is a statement of summary, if you like, findings from a couple of academic studies. Countries with a high degree of government ownership of banks have grown much faster in the last decade than countries where banking historically is concentrated in the private sector. Government banks are also less corrupt. I wouldn't be hard. And surprisingly, have been more profitable in recent years than private banks. And quite possibly the profits are because there's less corruption. I think possibly the two might go together, but that's my guessing there. So there's a couple of references in, if we get the slides out to our people. So, sorry, that bottom is a bit low for people to see, but this is the best known example of a publicly owned bank. The Bank of North Dakota. Now you think, oh, America's really big, but this covers an area of 680,000 people. So it's not covering a huge amount of people. Then they have a law that says all the state revenues must be deposited in the bank. This is the Bank of North Dakota. It doesn't pay bonuses, fees or commission. So that means the staff are incentivised to do things according to the local vision, rather than purely so they can grab more money and run away to have more yachts. It offers cheap credit lines to state and local government agencies and low interest loans for designated project finance. So it's very focused in what it does. It underwrites municipal bonds. This is where I reach the limits of my understanding. And it partners with local commercial banks. And the key thing about partnering with local commercial banks is that that area now has a lot more local banking activity and less involvement from the national, what in most of our views I'm sure would be corrupt banks, so there hence tends to be much more honest activity in the area. So if we did it for Cornwall, as an example, and I'm sure people from other areas could think about the same thing for themselves, the local population is 542,000, so it's a reasonable amount of people. Some of us say it's too many now, but you know, that's where we're at. Cornwall Council's annual budget, and because we're unitary, there is only one local authority really, other than much smaller parish and town councils. They have a budget of 1,100 million a year, 1.1 billion, although it is reducing, and it is one of the major problems. They own nearly £2 billion worth of property, but their net assets are only 500 million because they owe a lot of debt. And the reserves, i.e. cash in the bank somewhere, some of it was in an Icelandic bank, which they lost, are 175 million. So if we said there was a potential for 200 million to go into the local Cornish bank, a bank for Cornwall you might call it, and if you had 20% fractional reserve, because we want to encourage sensible behaviour rather than this risky running out at a 7% reserve, then you could lend out 180 million a year locally, or 180 million plus over time. Now, that could have a huge impact if it's run what I call sensibly, because the idea would be, as part of building up to having our local bank, we develop the vision for it. And obviously, given this where we're at now, we want that vision to be a resilient Cornwall, to have much more locally relevant economic activity with locally owned and run companies, CICs, social entrepreneurship and all the rest of it, with increasing local food and other import substitution, so food, energy, materials. You've got to get energy in there, being an energy person. Increasing local skills by having more variety of companies around and more variety of economic activity. And the key thing about publicly owned banks is they don't charge as much. They don't have to, because their profits are arrived at in a different way. They don't have so many megabucks people. They have real people who are interested in real things rather than just in money. And they also, I think a key thing is, because it's one of these, as mentioned earlier, enabling objects or processes, it would help with the local integration of the idea of independence and independence of mind, which I think there's a certain orneriness in Cornwall, but I think we need more of that to say no to the rubbish that's going on nationally and globally, and get more to local thinking and local caring. And of course it could be a step towards a Cornish economy. Thank you.
Okay, much indeed.